Hi everyone, this is Rob Roy and welcome to the first Elliott Wave Options U.S. market update of 2025. Happy New Year, everyone. As we do each and every week, the stocks that you see on the screen will be the stocks featured in this recording. If there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. Okay, lots to talk about. Get caught up over the holidays. Let's take a look at the chart of the S&P. And as you see on the S&P, towards the end of the year, we've been talking about this rising pennant pattern here. Whether or not that was an ending diagonal or not, there's a couple other pieces to add in there now, so we'll get there, but it very well could be as we've broken out to the downside. But another piece to add in there is a potential head and shoulders pattern involved here. You can see that that's the potential left shoulder, the head, and then the right shoulder here, both of those two shoulder highs right around 600. And then we came down to what would have been the neckline, or could still be the neckline, and we bounced again. It's not the typical head and shoulders pattern where you just finish the right shoulder, you come down to the neckline and then break it and go lower. But it's not that unusual to have a little bit of a test of the right shoulder. You can see it was a little bit lower high. Used to call that a humpback head and shoulders, where we had a little bit of a test there on the one shoulder. So when we came down to the neckline here, we had this gap up, and that was on a Washington Post news report that President Trump was going to be a bit more targeted on the tariffs, not going to be as widespread as thought. So the market like that, we gapped up, and then we had President Trump come out and say, nope, that's not true. It's a fake news article, and right back down we went to the neckline. And so we're sitting right here, and then we broke to the downside today. We did have some economic news that came out today. That was the non-farm payrolls report that came out, and it was much hotter than expected. With payrolls exceeding even last month, which was higher than expected. It was expected to be lower this month, and the unemployment rate ticked down to 4.1 as well. So the market didn't like that. We're starting to look less and less like we're going to get rate cuts next year, or this year now that we're in 2025, and perhaps no rate cuts at all. And we're going to start hearing whispering about a potential rate hike again. On the low here, one positive is that we've pretty much filled this gap that we had back in early November. So if you're looking for something bullish to hang your hat on, that could be potential. And then we also have a potential wave 4 sitting here right around 43%. We've moved down past that 38.2% level, which held right here at the neckline. So breaking down through the support line, if we get follow through on Monday, you know, follow through is important when you break major point of resistance, major moving average out of triangles, etc. Then we could be looking at, based on the head and shoulders pattern, to move potentially all the way down to 550. So we'll have to wait and see how that plays out. Let's go ahead and put the moving averages on so that you can see that we are below all the major moving averages. And not only that, we do have a bearish cross between the 10 and 30-day moving averages. So lots of negativity going on with the S&P. Those of you that were talking about, no ending diagonal, it still could play out that way with all the other things going on. Let's look at TLT, and this is another point of concern. I'll get back to the rest of the U.S. markets in a second, but this is really what's been concerning me. It was concerning me at the end of last year. Remember, TLT is prices on the 20-year, so yields and rates move inversely to prices. And so when prices are moving down, that means yields and rates are moving up. And this is a pretty extended wave 5 move here. A couple things that stand out. First of all, how far we've moved down, and we're right at the 161.8% level. We're at the very bottom of this wave 5 tap box. So if we're going to get down into this area, then you would expect to see some sort of a break back to the upside. But we're going to have to wait and see how that plays out throughout the rest of the year. This is an unusual movement here on the bond market. You don't usually see bonds move quite this far this fast. So a lot to be concerned about moving into 2025. And by the way, while I'm talking about the outlook for 2025, I did a discussion with JP Drysdale, who's the CEO of the Hub organization. That's the company I've been talking about. That's the creator of this software, this Elliott Wave software, and also the employer of the data scientists that do the AI that we use at Elliott Wave Options. So if you'd like to take a look at that discussion and what AI is talking about for the outlook of 2025, you can see the link in the discussion below this video. So give it a look. I think you'll find it quite interesting, a rare opportunity to talk to the CEO of the Hub organization. So just wanted to mention that. But the bond market I've been talking about throughout 2024 has been screaming something is wrong, something is wrong. And we've had little discussions here on these U.S. market updates on whether or not the bond market is right or the equities market is right. It's been my experience never to ignore the bond market. And so far, it seems like the bond market is right. It's been right to be concerned, especially now if we're going to take out any sort of opportunity for rate cuts this year and get that whispering in of rate hikes. Taking a quick look at the VIX. We haven't updated for today yet, but even with the movement today, we didn't break above 20. What does that mean to have such a big down day in the market and really not much of a spike up in the VIX? Does that mean there's a lot more to the downside to go? Or does that mean that, ho-hum, this move was just a reaction to that jobs report and it's not really going to be that big of a deal as far as moving forward this year, and that we could hold this wave 4 and then head up towards that wave 5 over there around 640. But look, that's well into the end of the springtime that is calling. So I was talking about how we're likely to have a correction. Just didn't know if we'd have the corrective move first and then move higher, or if we were going to move higher and then have the corrective move. But there's a lot of goodwill was priced into the market after the election. We got that post-election bump in the markets, and now we're going through and doing some correction. We haven't had that 10% correction yet in the market. We're overdue for that historically, so we do need to keep an eye out for that. So let's take a look at the DIA real quick, looking at the other U.S. markets. And this is one that has been a little bit more in the corrective mode than the SPY, but they've been pretty much in lockstep. And you'll find that the majority of the averages are. I've talked in the past that markets can get discombobulated, I call it, but for short periods of time, usually they're similar. They're not exact, but usually they're similar in nature in the patterns. Now on the DIA, we had more of a traditional channeling move to the upside rather than that condensing pennant pattern or a potential ending diagonal. But same thing here. We broke through the support level right at 420 on the DIA, but again, you need to see a follow through, a confirmation day. So all eyes on the market on Monday to see what happens if we follow through this to the downside. But we've also had the bearish cross between the 1030 on the DIA. Now let's move to the Qs. The Qs also with the wave 4. Note that it's labeled in green, so the algorithm is not convinced that this wave 4 is finished. More of a descending triangle pattern here on the Qs. Right here at support at 510. Once again, we broke below that, below all major moving averages, but we didn't have the 1030 cross until today on the Qs. They've held in there amazingly well as rates have ticked up. Again, showing you that chart of TLT as prices were going down. So I think when we had the election bump, we had a renewed interest in those Mag 7 stocks, and that helped hold in the Qs just a bit, but maybe they're starting to break down. We're going to have to wait and see if all these wave 4s can hold, or if we're due for more of a corrective move. Now let's take a look at the IWM. That's the one market out of all that I thought was acting the way you would expect it to the most out of all the markets, and that's the fact that the IWM small caps are widely viewed as being susceptible to interest rates, and with rates ticking up, you would expect the IWM to go down. I would have thought the Qs would have gone down more as well, but they didn't. But the IWM, right in line with what you would expect. The support level there was 220. We broke that. All the moving averages, all the major markets breaking below support levels on the move today. And with this wave 4 down around 72%, we're getting awfully close to disqualifying this potential 5-wave pattern. So is the IWM the leader, or is it the outlier on the fact that this wave 4 is pulled back further? And if it does get some follow through on Monday, we're probably coming down here to 205. On the IWM, that seems likely after breaking out of this ascending triangle that it had. Let's take a look at the metals. Pretty interesting with what's going on there. We actually had a strangle that we sent out to our subscribers in the volatility portfolio at Elliott Wave Options as GLDs just formed this fantastic symmetrical triangle pattern here. I felt like maybe the metals were going to wait and see whether or not Trump does put these tariffs on, or if it's more leverage and jawboning trying to get what he wants without having to enact them all. But the pattern was just too good to ignore. And for those of you interested in Elliott Wave, just look how good this pattern was. So right here we had this zigzag pattern that went exactly to the 100% extension, right where the wave 5 was, right in the middle of the tap box. This is an amazing piece of software. If you haven't gone to hub.com and gotten a copy of it, go there. You get free Elliott Wave. You also have an opportunity to get AI signals if you would like, and we'll hear more about that if you watch that discussion that I had with the CEO of Hub. So there's this nice well-formed symmetrical triangle. So we went ahead and put the strangle on, and so far we've had this nice breakout to the upside on GLD. So that's working pretty well. So perhaps looking ahead, maybe gold is. Now, if we go to silver, slightly different pattern, but still a consolidation pattern in a descending triangle that we have here. You can see the movement to the downside here, and then the support level just under 27. It hasn't quite broken out of its upper trend line the way GLD is broken out of its symmetrical triangle, but we have had a little bit of a move to the upside here on SLV. It's just it hasn't moved quite enough to get out of that line of lower highs. So we do need to see a little bit more action out of SLV, but both of them in consolidation patterns, just one in a symmetrical and one in a descending triangle. Let's look at UNG, because gosh, we've talked about this quite a bit lately. And you can see that with UNG breaking to the upside here. We talked about it in our TradeFinder meeting. I'll talk more Finder earlier this week. Also talked about it last night in our insight meeting for alerts at ewovetrader.com, where we had this ascending triangle pattern. We broke to the upside. We broke two vertically. You know the rules. No security in any time frame gets too far from the 10-day moving average. So let's just start off 2025 reinforcing these rules. So big gap up, big vertical move. Don't like either one of those, because what goes vertically up oftentimes comes vertically back down. So we came back down right to the 10-day moving average. We also tested the upper line of that ascending triangle. And after this successful test and coming back to the 10-day moving average, we gapped up again. I was wondering how that was going to work, because here in the mountains, it is absolutely snowing today. So thought last night, we're talking about that, it was supposed to come today. It did. Wondered if that would put a bid under natural gas, and it seems like that's exactly what happened. Now, one that surprised me a little bit, if you were watching last year, is USO, and taking a look at where we are with oil. So when we look at the chart of USO, we had this real nice symmetrical triangle here as well. Did expect a breakout. The triangle's too good. Triangles break out. That's the one thing we know. We can't pick a direction on any of the triangles, but we do know they're going to yield breakouts. But I thought when we broke out that we might run into a little bit more resistance here, just underneath 80. That at the high from back in October, and then the lows down here close to 65. That oil would just stay in this big trading range. And I know President Trump's been out there and harping on the drill, baby, drill. We're going to see more domestic production, no doubt about that. My viewpoint has been that whatever additional production that we have in the U.S. is probably not going to bring down oil prices as much as the administration might hope, because I think OPEC will just cut production to match whatever excess production the U.S. makes domestically. So I thought maybe we might just stay in this big trading range. OPEC is happy to see prices stay elevated, but we broke out of it today, so perhaps I'm wrong. We broke above this resistance level. Now let's see how far we can go to the upside in oil. But with everything going on, with the pressure that we have of rates, the economy is still staying strong, less likelihood of a Fed rate cut this year. All those things are going to be a lot of challenges for the administration right off the bat as they come in. But I did want to show you that. So surprising to me on that move to the upside. Adding in the dollar, which you would expect with everything that's been going on with the interest rates, that we would have support under the dollar, and we really have. That's going to be challenging. We've had an elevated dollar for a while now. I didn't want to see the dollar move above 104. Again, if you were watching last year, I wanted it to stay down in this range between 100 and 104, but it's broken out. And that's going to go directly to margins, directly to the bottom line when we start to see companies reporting their earnings. Starting next week, we start to get earnings season going. And when you have these exchange rate problems with international companies, and many of them do have international exposure now, that's going to weigh on margins, as I said. All right, now let's move into the crypto world. We'll look at Bitcoin here real quick, which has been where the action has been in addition to the bond market since the election. We had the big break above 100,000. Wanted to see how high we could go. We got a little vertical here. Thought we might make it to 110. We didn't quite get there, but got close. And then we came back down and we stayed in this corridor here of where we were before the big break above 100,000, somewhere around 95 to 100,000 right in this area. A little bit more support down there, just under 90,000, but we didn't really go and test that for very long. We got back above 100,000, but made a lower high right here, so you can see that trend line. But still, I think with this big move that we've had post-election in Bitcoin, with a crypto-friendly administration coming in, we've held pretty well because that was an extreme move that we had to the upside in the cryptos. And so to see this hang in at this point, I think you'd be happy if you're a crypto trader adding into other cryptos. Ethereum is not acting quite as well as Bitcoin, but not too badly either. Holding in there, we had a lot of consolidation right through here at 3,500. We started to break above it, but again, a lower high, and then we broke back down. But we're in a pretty good range here. As long as we stay above 3,000 in Ethereum, I think we're fine there. A couple ones that people have been looking at and been talking about lately. Cardano has come back basically seemingly from the dead. You can see where it was down here around 25 cents and ran all the way up above $1.25 in that post-election bump from cryptos. And once again, consolidating awfully well, hanging around the dollar range after that big move. Things don't go straight up forever, and they're going to come back down and consolidate, go do some backing and filling when you have these big moves. But I think if you caught that move, even though it's pulled back a little bit, you'd be pretty happy. Another one a lot of people have been talking about that's been in the news, probably performing the best, is XRP. That one came from 50 cents down here and ran all the way up to, look at that price, all the way up to 275, from 50 cents to 275, literally in a matter of a couple weeks. And it's also consolidating very nicely. We are getting a little bit of a descending triangle pattern here. Again, that doesn't mean a downside breakout. We could break higher from here, but it's a good consolidation for a move of that significance. So nice moves in the crypto world. There's a lot of pretty wild predictions on where crypto could go. And the more issues that we have with debt here in the U.S. and servicing debt, you just think it's going to create more of an interest. A lot of people, a lot of the commentary that I've been hearing are more looking along the lines of how it could be better as far as stabilizing the economy, et cetera, with the concerns over the U.S. dollar more than just a trading vehicle, which a lot of people were looking at crypto for a while. So kind of the message, I guess, the underlying message of crypto has become a bit wider in the international markets and above pundits. All right, let's go ahead and take a look down here at some stocks of interest. We're going to start at EQR. Now, this is one we featured going back and talking about TradeFinder. And by the way, if you haven't signed up for TradeFinder, you can do so on your screen. You see it right there. We talk about the markets every week. We do it at on Tuesdays at 1 p.m. Eastern time, so it's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A. And this is one of the stocks that I gave out for TradeFinder this past week. This was from our AI searches. Again, if you're interested in AI, look at that discussion that I had with the Hub CEO. And we were looking for EQR to go down to 65. And it looks well on its way, even though it might be a little bit oversold here, but on the way down. So again, sign up for TradeFinder and join us. It's a great community. They converse together. They ask great questions. It's a great live show during the market. So we'd love to have you. And by the way, while I'm talking about this, as a reminder, we did this last year and it was well received. So we're going to go ahead and do it again this year. We're going to give away one of our free level 3 subscriptions at ewotrader.com. That includes our time strategy, which is a sideways-based strategy. We also have the volatility strategy, which I think is going to be a point of interest with the consolidation that we've had. And I think the word of the year is going to be volatility. I think we're going to see a far more volatility. Super excited about it because as an option trader, the one thing that you're asked, if you ask seasoned option traders, what's the one thing they want in the markets, they're going to tell you volatility. And I think we're going to get that. I think it's going to be a fantastic year. And then in addition, those AI signals that have had just a phenomenal track record since they were launched back in August of 23. So you get all three of those portfolios. It's worth thousands of dollars. We give away one each month. And to register, all you have to do is leave a comment underneath this video. So we're going to continue that this year if you were wondering. So please go ahead. If you didn't win last year, perhaps you have a chance to do it again this year. Another stock of interest, RGTI. We've talked about this one a lot. You guys have asked about it in the past, so I thought it would bring it up because it's been in the news. Once again, too vertical. It went too vertical too fast. This is quantum computing. And some of you were saying, oh, no, we don't need AI because quantum computing's coming. Well, the CEO of NVDA came out and said, no, that's way off. They're going to be involved in it. So the market seemed to take heed in what he said. Because here we came right back down. And I would submit to you, well, that's pretty normal when you have a vertical move. What goes vertically up, oftentimes comes vertically back down. Now we'll see if we can stabilize in this $10 area. That'll be important. You can see touching the 10-day moving average today. So that's going to be key to see where we go from there. Other stocks that you're interested in, Palantir is one that you guys ask about a lot, also been in the news. It moved exchanges, so there's not really that gap there. It just looks that way because they're catching up with the data on the different exchanges as it moved to a new exchange. So this is where we are down here in Palantir. It's just it really isn't a gap there, but it has had a pretty significant move back down. And a lot of people are like, why? What's going on? Well, once again, it had a great move. It doubled since early November from 40 to 80. Above 80, so you're going to have some backing and filling. Probably didn't want to see it come down quite this far, but right here in the 60 area, in my opinion, is where this needs to hold. You can see it's formed a wave 4 there. If we can hold that wave 4 right in the 38.2% level, we're right on the 50-day moving average at this point. So no harm, no foul if we can hold here. However, if we were to break below 60, which would be surprising to me, but if we were, we're in danger of giving this vertical move back. So it is really key that we hold here in the 60 area on Palantir. And then, of course, we can't start off the year without talking about NVIDIA. So we'll take a look here at NVIDIA and back to the downside here. Just another great Elliott Wave pattern where we had the nice move to the upside, the wave 3 formation. Then we came back down, had a wave 4 awfully close to 50%. We moved back to the upside. We did take out that wave 3 to make a wave 5 high. If that's the end of it, if you're bullish on NVIDIA, you don't want that to be the end of the wave 5. You want it to continue. But we're right back down here testing support. So the key level here on NVIDIA, we got to hold in this area here of 135, 140. We don't want to go down and take out this wave 4 low. And if we do break below this level right where we are right now, so again, early next week is going to be key. Then we're probably coming all the way back down to the previous 4 because that's Elliott Wave rules. If that wave 5 is indeed done, and it doesn't go back beyond 100%, you come back down to the previous 4. So, wow, lots to look at this year. Hopefully that caught you back up. Hope you had a great holiday season. Glad to have you back with us starting this year and look forward to having a terrific year with you. Thanks for your attention. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.